Jeff Lutz, as I was looking around today, I saw one headline, and the headline, this was talking about what everybody was talking about today in terms of the punditry, and that was,
Hmm.
so was the 18-point gain a relief rally?
Yeah, I mean, technically the stock was oversold. Did not mean it couldn't go lower. Um, I think I think um, the company delivered the messaging that the market wanted to hear, both in the short term, the medium term, and the long term. And short term, they explained what happened in Q1. It was much of the conversations we had, um, Randy, and I think Cern went through it as well on one of your shows too, pretty well. And Cern and I spoke about just like what happened in Q1, like what happens with straining inventory, what does it do to available cash, what does it do to supply being ahead of shipments? Why was there more supply than shipments if you're saying we had a supply issue? How does that work? And I think, Elon even had a quick one liner of like, well, when your product's sitting on boats, it's not being delivered to customers. And that was probably the best. What would have taken me 30, 45 seconds of, you got it out in one line.
Right.
I don't know if everybody picked up on it, but the CFO reiterated as well. So basically, there's some number you tie to Q1, like Q1, the results were poor, I would say, in terms of revenue and like let's talk about earnings, right? Revenue, EPS, um, below plan and really, trending lower quarter on quarter for the past several quarters. So like what's going on with the business, the health of the business. And they went through it. And you could easily, in my estimates, prescribe 40 to 70,000 units to the Red Sea, the Berlin issue, and then of course the undersupply of the new Model 3. But that doesn't like let Tesla off the hook. I mean, some of these things are Tesla execution related, specifically the Model 3. And then you can't fault Tesla for the Red Sea issue. You can't fault them for their factory being attacked. And it looks like they recovered as quickly as anybody would. And by the way, Tesla has, by Gartner's rating, Gartner's one of the most foreknown supply chain, rating consulting firms. They're number one auto manufacturer in the world. I mean, Toyota's below Tesla now.
Right.
And I
Right.
think Tesla is the number 14 supply chain of all supply chains, of all industries. So Tesla has a good supply chain. But they definitely were hit with some issues in Q1. They kind of explained the short. And by the way, on the short term, they killed it on COGS. Like they talked about per unit COGS. They didn't talk about aggregate COGS because when you put Cybertruck back in, it makes things a little bit messy. But where they ship 97% of their volume, which is 3 and Y, they crushed it on COGS, the per unit COGS. They were able to take down, and they're able to take it down even in the face of lower production and shipment volumes. That was very compelling to me. That tells
Well,
me that they have external forces that they can leverage on COGS that maybe others can't. And that means they have a very strong engineering effort, a very strong supply chain effort to take these opportunities and drive COGS down. They showed the picture in the earnings deck of the Cybertruck torn down to its base component level. And so they have a strong COGS program. They kind of underplayed it on prior conference calls, but as I thought, they're killing it. So that's kind of the gross margin, and that's one of the reasons gross margins were roughly in line.
yeah.
Um, Operating margins are lower. Again, when you strand the inventory and you have all this investment that they're doing in compute, they're now the number two company in terms of computing power and total compute and H100 equivalents. So there's some very interesting data that shows where they're ramping in the business. And to me, the short-term metrics were relatively, there's an explanation. And then they talked a little bit about Q2, saying it's going to be better than Q1, and the fact that the year is going to be better than, like we're going to have a slower growth in 2023, but we're going to outdo the volumes of 2023. I think those were encouraging messages. Um, and then on the medium term, introducing these these between vehicles, between this and the new platform, that medium term view coupled with the, maybe ramping at the end of this year, to me, that kind of rounds out a more stronger view of 2024 than no guidance on volumes and, and no new products after this year. They kind of just flipped that on its head and said, we're going to do better than last year in volumes. And oh, by the way, we're going to pull in aspects of the next generation into our current product line, take the cost structure down meaningfully. And that has so many COGS implications. We could spend a whole show on it. In terms of what it does for depreciating existing CapEx. I mean, they're going to have if they can get some volume under this and rates start becoming relaxed, like they're going to be in a position that none of the other manufacturers are going to be in, to be honest with you. And then on the long term, they confirmed a number of things with Optimus, with the robotaxi platform, and they were very strong messaging. So I think that's what gets you the rally today.
Yeah, I thought it was a bunch of pieces, different things for different people. Most of the punditry is saying it was all about the Gen 3 vehicle, the $25,000 car, whatever you want to call it. So let's concentrate on that for just a minute. There's a lot of questions around that. What is coming out, in late this year or early next year, what exactly this vehicle is. So my impression was, I'm just listening to the words. That's all I try to do, but the words are not always clear. So different people can have different impressions. My impression was that what's coming out at the end of this year is the Gen 3 car as planned. Nothing different than what would have come out in the middle of next year, but it would just be built in a different way. It was the how, not the what. And that's what I've been saying all day long. Not everybody agrees with me, but in other words, they even said, if I remember correctly, they even said during the call that they already had all the parts, if you will, the sections. These were all done. I mean, not done, but planned, ready to go. And all they're going to do is, instead of putting it together unboxed, they're going to put it together partially unboxed and partially in a traditional line. That was my impression, but I trust you to have heard it better than me because you're more involved in that size product than I am. And I'm curious to see how you got it.
Yeah, here's what I heard, Randy. What I heard is we have our existing product line today, mainly let's focus on the 3 and Y. And we have this next generation product line. And what's in a product line? Okay, there's a bunch of inputs to it, right? Think of the communications in the controllers, the communication, the exoskeleton, the structure, and think of the motors, the inverters, the battery modules. All these different things are inputs.
Mhm.
And to do a 25,000 retail vehicle, you want to get your COGS somewhere probably in the $17,000 to $18,000 range in a terminal manner, meaning you're not going to be there at launch,
Right.
but throughout the lifetime and throughout most of the lifetime, you will get it into that range. And what Tesla is saying is that now COGS, what's in COGS? We shouldn't assume all of our listeners understand what's in COGS. In COGS, there's something called the bill of material. So think of the bucket of parts you saw in the Cybertruck picture. You saw them laid out over the floor. That's kind of the bill of material. It's a list of thousands of components. It could be 10,000 parts in a car. That's in COGS. Okay. And Tesla makes some of those.
And the number one cost in this car is the battery.
Yeah, but the battery in itself is many hundreds of components itself. So I'm
Right.
talking about, when you talk about the 10,000 components, even that battery module is, probably hundreds of components inside of that. And that's what we're saying, stripping it down to the base layer is really important. So you have bill of material, and then you have something called non-bill of material, which is the main cost is the conversion of those parts into an assembled vehicle. And then you have the warranty side of it. You have the Tesla call center, the website. You have CapEx both on the supplier side and the GA side, the factory side of it. You have, I said warranty, you have outbound logistics. So all of those things make, you have inbound logistics as well. All those things make up the non-bill of material side.
Mhm.
Okay. And then when you add bill of material and non-bill of material, you basically get all of COGS. Okay. This is product COGS. This is okay. So what I think Tesla is doing, why did I go down that tangent for a bit? What I believe Tesla is doing is when you have an unboxed process, and I've run unboxed to build mobile phones before. I understand what this is. It's kind of a name that Tesla has given, but it's basically a modular parallel assembly process.
Right.
Okay. So for Tesla to do this, they're going to have to recapitalize their factories. It's not going to even look like a conventional line. It's almost kind of like you can do a brownfield operation where you strip an existing factory down and rebuild it up, or you can go greenfield and build it up to be unboxed, but it's a new thing. And then Tesla has all these existing lines right now. Okay. Um, so what I believe that they're doing is the current products today are meant for a non-unboxed process. They're meant for kind of a serial assembly process. So what I believe that they're going to do is they're going to pull forward as many of those input modules as possible that were going to be in the next generation product, and they're going to pull them forward. So if it's, I'm making these numbers up, but they may be pretty close. If it's today, it's a $1,500 electric motor that's in the 3 and the Y, and they've got something that's just under $1,000 for the 25K vehicle. They're going to try to pull that forward and put it into this, call it this betweener vehicles that they're talking about. There's hybrid. Maybe hybrid is the wrong word to use
Right.
in the auto context. So they're going to pull forward some of these modules that go in. So maybe it's the 48-volt architecture, it's the whole wiring architecture, it's the motors, the inverters, it's the battery module, which with all of its components inside of it. Like this is a lot of stuff actually when you think about it in terms of the total COGS of the vehicle.
Right.
So if they can pull these things called modules, that would be modules in the unbox process, and they can pull them forward. You don't have to build them in an unboxed manner. You could insert them into a standard serial line operation. You're not going to get the kind of assembly time reduction you would get in unboxed. You're not going to get the factory surface area improvements you would get in unboxed. All these things drive cost structure, and the non-bomb side of it, if we're talking about what I just explained. And so you're not going to get that. But what you would have to do is some slight, what they're called tooling modifications to maybe the existing 3 and Y to accept these new components. Maybe the motor's got to mount a little bit differently. So maybe there's some slight product tooling changes they have to make. Maybe there's some slight line adjustments they have to make, but it's not a wholesale new line. It's not a wholesale set of new tooling. And that's why they can accelerate it and move faster. These modules had to be ready earlier than the unbox process to ramp the 25K vehicle. You always have to get your modules ready earlier, and you have to get the base components that go into the modules to be ready earlier. So if they were ramping the next generation platform in the middle part of next year, it'd be my estimate that a lot of the electromechanical stuff would have been ramping 2 quarters prior. And then the input materials to those modules would have been ramping in some part of this year. Okay. And so I know that's a lot for maybe for the viewers to kind of tackle in, but if I could just summarize it really quickly, what I believe that these vehicles is they're going to pull forward some of these lower cost modules. They're going to look more of like a refreshed Model 3 and Y. Now they can make some minor changes if they want to make the cars look a little bit different, like they just did with the 3. That's fine and dandy, but it's going to be assembled in a more of a 3 and Y line format today. But it's going to be those new lower cost modules, which should bring down the bill of material cost. Okay. And the other benefit is if we can get more volumes, Elon talked that we have this near 3 million unit capacity.
Right.
If we could fill up utilization again, and if we can get more utilization on 3 and Y than we originally planned, that was going to go into the 25K vehicle. If we can get more life there, you can bring the non-bomb COGS down even further with greater utilization of those. So if this supply chain can run at a 2.5 or 3 million unit run rate with before the 25K vehicle, you're going to get COGS like you never had before. Okay.
Mhm.
Before you get to the 25K vehicle. So now for your viewers, you got to think about where are the 3 and Y today. The 3 and Y today are probably between China and the US, somewhere between $29,000 and $33,000 in COGS today. And where would you need to be at terminal, at terminal, for terminal COGS on the 25K vehicle? Probably something between 17 and 18K. Okay, so you have these two extremes of 29 to 33K, 17 to 18K. What I think Tesla's going to do is they're going to grab some point in between. They're going to do it earlier, and they're going to grab that point and make product available there.
Okay. So as a marketing guy, I would say that's not what I want to do. I don't want to destroy the number one selling car in the world that I can charge $50,000 for, and all of a sudden offer a version of it at 29,000 or 25,000. It completely messes up my market, the thinking about my products, the thinking about who we are. Kind of like Mercedes did have a little bit of problem when they first introduced the E, in that way years ago. So I think at a bare minimum, we have to have a different shell and a shorter platform so that this becomes a completely different car, so that it is not considered to be just a stripped down Model 3 or Model Y. It's got to be a hatchback. Maybe it's going to be a little van. That's the two that everybody seems to think is going to be. I keep thinking it's going to be a small truck. But he said vehicles, so at least two, maybe three. But I just feel it has to be a different sled and a different shell.
And Tesla will be debating these things now internally. I'm even surprised to see the differences between the Model 3 performance and the or ludicrous and then the other new Model 3. I'm surprised that they even made those body style changes. I'm assuming Tesla's having this debate internally. I think the side of simplicity is going to win. I understand the marketing side of it, and there's not necessarily a one answer in this situation. But I think they're going to try to get as much out of the tooling as possible. But it depends. If it's just a front fascia change, if it's something somewhat subtle versus them being wholesale different looking vehicles. So the more radiuses you change, the more magnitude of a change you do.
Mhm.
Now you subject the car to having to do everything over again from a reliability perspective. Not that they're not going to do all this testing again, but the probability of failure is higher when you start changing the physics of the vehicle and the product.
Well, okay,
So my guess is they're going to try to
okay,
my
but
guess is they're going to try to maintain the look as close as possible and then differentiate on, maybe there's a high performance Model Y and a high performance Model 3 like that was just announced. And that's going to give, that's going to be the $50,000 plus variant that if you want that superior, Tesla, that's what you go get. And then the bread and butter volume is going to be something that they can price, maybe closer to 30 to 35K.
assuming they started last May, which is what we understand from the book a year ago, they decided to make one or more vehicles on this platform, not counting the Cybercab, that they were going to make one or more vehicles on this platform that was going to be a hatchback or a van or whatever. Wouldn't the shell and the sled have been designed already? Wouldn't that be way past the design process? It would be at this point, even if it was going to come out next April or May, wouldn't we already be there? Wouldn't that be something they've already put in a wind tunnel? They've already thrown it up against walls to
Oh,
see.
I think those new, um, the completely new looking vehicle form factor is the next generation platform. It's not these between vehicles that will ramp sooner. These between vehicles that will ramp sooner will have the lower cost components that still perform really well. And
Uh-huh.
maybe they'll go in and put the LED lighting in the Model Y. They'll do the the backlighting change, some of the front fascia change they did on the Model 3, but but that will be the Model Y across the board, I believe, and it's going to have these new components. So the bill of material should come down, the cost should come down meaningfully. Yeah, if they're doing these new form factors, Randy, I believe those are actually for the next generation vehicle. And what's nice about that is if you can de-risk the input modules sooner, so
Mhm.
you de-risk them from a quality reliability perspective, and you de-risk them from a supply perspective, then what happens when you actually start the compact vehicle, there's something in the industry that we look at called either time to break even or the time to peak velocity. And when you try to get things to their peak velocity quicker, because once they're at peak velocity and they're at peak yield, you're at your lowest trough in cost.
Mhm.
And
Mhm.
so it's everything, all those 10,000 components are on a race.
Mhm.
It's like a train that leaves a track and they're all kind of on a race. I want to get the peak velocity. I want to get the peak um, to peak yield. And as soon as I do that, I'm at my lowest point in cost. So what does this all mean? This means instead of it taking a year or more to get the compact vehicle to that 17 to 18K COGS target, maybe it just takes a couple of months.
Okay. All right. Well, I think we've had a robust debate on this. I'm going to stick with my idea. I'm sure that you're, no, it'll be fun to
Yeah,
see.
there's no wrong answer here.
No
There's no
wrong
wrong
answer.
answer.
Right, right. I just think it'll be super. Here's my long-term problem with that idea is now you come out with the compact car at 25,000. You've already got your mixed car at 25 or 30,000. Where does everything fit at that point? How do you sell the actual compact
You won't sell the mixed car at 25.
anywhere? You'll just,
You may
oh,
get there with some rebates in some countries, but you'll sell the mixed car in the 30 to
oh, right,
35 because basically threes and Ys are, they're basically, I think the average transaction price is 43 or 44K.
right.
So think of it in aggregate. Think of it bringing this down from 43K to 33K.
Okay,
That's a big number.
no, I could see that if that's what they're gonna do, that would undoubtedly open up additional TAM. And still leave
100%.
room and still leave room for a compact. Yeah, I can see that. That's a
Yeah.
possibility. Yep.
Yeah.
All right. So let's see. All right. Is the ride hailing service something different and a precursor to the driverless taxi service to come? Will there be a supervised driver for now? And will it start sooner than August 8th or maybe right after August 8th? Or is it going to start immediately when it starts? Will it be driverless from day one and it's maybe even sometime after August 8th?
Yeah, the way these are big changes in the company's trajectory and future, and this is bringing on, you know, large revenue product lines. And what you want to do is you don't you you know what is it? The enemy of perfection is, you
Yeah,
don't want to wait till everything's perfect.
right.
So I could see them taking this in stages and de-risking it. And my belief is they're going to start a Tesla ride sharing service with Tesla vehicles with full self driving 12.x or 13.x, whatever they decide to do. That will be so good that you would have a driver behind them. It could be you. It could be this is how you make additional money with your vehicle, or it could be somebody else that you allow as a fleet, in your fleet. But they'll have a human behind the wheel. But the human will have so much assistance and there will be so much data that this process will feed into the real robotaxi service that the human could work many more hours. The rides can be more competitively priced because the humans can work more hours. And the fact that the vehicle is doing most of the driving. So, you notice when Tesla announced this, Uber went down after hours.
Uh,
And so I believe that they could start with this. They could also form a partnership with an Uber or Lyft potentially because, and people debate, and this is the debatable topic too. I think there's really good data that they have, and they also have the client list. And in exchange for that, if Tesla could provide them vehicles and if Tesla could be this partner, they could maybe take their labor costs down, which is a big component of their COGS. And so I think there's something on both sides of that being a potential partnership. but I believe Tesla will start with drivers behind the wheel. As the quality of FSD improves, then there'll be a level, 4 approved type solution where you don't need it. So I think they want to take it as in gradual stages.
And you and I are exactly and perfectly aligned on that one.
Yeah.
No need for further debate. That's exactly. And I think there will be a deal with Uber because I don't think Uber survives without them. And I think that Tesla will gain dramatically from having that partnership with the third party. Doesn't mean that Tesla won't have their own fleet at some point separate from Uber, but I think that they will put some kind of a deal together with Uber. That's
And
my
Uber's been trying for years, and Lyft too, to do even their own in-house
right.
development of driverless vehicles, and it's been a not a good experience.
So the cyber cab sounds like it might be stainless steel. Yes? No? What do you think? Is that why it's a cyber cab?
Yeah. So to hit this cost structure, you're going to have to delete components and delete process steps. And one of the biggest capitalized sections of an auto factory is the paint room. And um and it's $1 billion of capex roughly. It's a big number, right? So what you do with that number is then you start depreciating it and dividing it around the volume that you're shipping. And it's also a huge cost center from a quality perspective. You got to put product back through it. So yeah, if they could figure out how to make stainless work, how to give even lower cost wrap options. So, if fleet operations want to put their decals or logo, they make it just super easy. Um, and this could also drive the longevity in terms of, the product and how fresh it looks. So maybe, if these things have million-mile batteries and million-mile drivetrains, and all you got to do is kind of freshen, how the outside looks, and there's a really low-cost wrap option. Well, I think this changes the whole unit economics of the lifetime cost of a robotaxi.
All right, so now I'm getting a little bit confused. Do you believe that the cyber cab and the Gen 3 vehicle, the final vehicle, assuming that we have a different vehicle a year from this fall than we have at the end of this year,
Yeah.
the eventual vehicle, is that a different vehicle than the cyber cab, or are they the same thing with one with a
I think, okay, yeah, I think these earlier vehicles that Elon talked about are more similar to the 3 and Y or the 3 and Y
right,
themselves.
right.
I think the robo taxi is the cybercab, and I believe it needs to be. And so I believe Gen 3 is a platform it's a platform. It's these modules, it's this assembly process, but the vehicle form factors could look different. So I believe Gen 3 is a platform, and and Gen 3 is a product platform, and then the unbox process is its own product platform
Right.
in itself, and those two have to mate and work together. So I think the cybercab is a robotaxi, and I believe it's got to hit a cost structure to make the cost per mile work. I think Tesla's actually going to change the metrics when that robotaxi is launched. It's not going to have an MSRP. It's going to have a cost per mile number on it.
All right, all right. So as a business book author and as a manufacturer and in lots of other businesses over the years, I have always said that suppliers are more important than customers. There are lots and lots of customers. There's only a few great suppliers. So I was not shocked, and yet I was shocked. And I thought you would be the other one who would just be going, oh my gosh, for them to say this, that they are not ramping 4680 as quickly as they could in order to protect CATL and the other battery suppliers who are hurting right now. I thought that was an amazing statement of we need these suppliers in the future. We need them to stay healthy. We have a relationship with them. We care. Were you blown away by that statement?
No, because of what I've seen with Tesla versus legacy auto, and legacy companies tend to treat it as kind of like a I win, you lose
Yeah.
relationship. Yeah, they'll say they're driving win-win and all of but in terms of how they behave, I mean, the auto supply base is hurting. Tesla really from suppliers I've talked with in the past or worked with, and and from people I've known, and again, there's no inside information or anything like that. It's just like it's conversations about companies, and I've always heard very good things. Like Tesla's tough, but they're fair, and that's what you want. So in this situation with batteries, here's what I believe Tesla is doing in the whole supply chain world, whether it's H1, whether it's compute on the infrastructure side, whether it's batteries, whether it's lithium refining, all of these things have one thing in common, and they're bottlenecks. And they're bottlenecks to the process of a sustainable, transport future. So when Tesla sees bottlenecks, and there's two kinds of bottlenecks, there could be multiple kinds, but there's
Right.
two main kinds. One is on supply, and the other one is on economics. And when one of these things becomes a bottleneck, and I think all three of them have become both the supply and an economics bottleneck, Tesla steps in and says, I got to build this capability myself. So that's the reason with 4680, it's such a huge portion of the bill of material. And so it makes sense for Tesla to continue to invest, but they may not have to grow their capacity as wildly as they may have previously thought, given the overcapacity situation with the other suppliers. So what you want is that hedge back and forth of like, I build these things, I know the cost structure, I know what the cost per kilowatt hour should be at the cell level, I know what it should be at the module level, I have my own benchmark, I need you to meet or exceed the benchmark. A lot of this is now market pricing given with the overcapacity. So Tesla's building hedges basically, and they were pretty outward on the call. And what they're trying to do is they know millions of people actually listen to the earnings call and they want to send a message.
Yeah.
And they actually sent the message on the last earnings call, and a lot of people didn't pick up on it. But the message on this one is, if you're a battery supplier, we're going to work with you, and we're going to take all that supply that everyone else is not taking, because everybody pulling their EV capital back screwed all these suppliers. So Tesla's going to get some great deals there. They also sent a message when they were when Elon was backing off of Dojo, he was basically in that mode of going from 10,000 or so H100s, maybe only a few thousand, to the 35,000. And what would screw up your path from going from 10 to 35,000 is bragging about your own compute and network infrastructure versus saying, this may be a total zero. NVIDIA, I need everything that you can give me.
Right.
So you want to respect your suppliers in public. You don't want to disrespect them. You need them. They need you. So there was actually a message on that call.
Nice. I get it. Yeah. And I was just like, I mean, I guess I was blown away because I know that some of these things that I have recommended over the years, like so many things that Elon does that I talked about in the method, so many things that he does are, to me, they're just the obvious things that anybody that's in business should be doing. He just does them at a higher level. And taking care of your suppliers, to me, is one of those obvious things that I rarely am able to convince clients or anybody else about. And I'm just saying to anybody out there, if you're not taking care of your suppliers, listen to what's taking place right here. It's incredibly important.
Yep.
Semi has been moved to the end of 2025. A bandwidth issue?
Well, semi needs a factory, and it's going to be a slow ramp. So Tesla has to step back and say, what are all the capital decisions I'm making over the next 4 quarters? Well, I'm going to be buying a ton of compute. And as soon as I press the order button, I lose that money. It's being sent over to NVIDIA. And so the question is do I want to stand up a factory that's going to run at 10% utilization for the first, you know, 2 quarters, 20% utilization for the next 2 quarters, something that's going to take 12 to 18 months to get the 75, 80% utilization. Do I want to do that where it's a furnace? I think Elon's used the term a furnace.
Mm-hmm.
Or do I have a deficit in compute and I just need to continue to fill in that deficit in compute? So that's one side of it. The other side of it is you need charging infrastructure for semis across these corridors in the nation. And that's going to take some time to build out. I know the government's doing some funding. I know Tesla's doing their own. Um, so you have a charging infrastructure piece. You have the factory utilization side of it piece, and then you just have a you know what's the demand look like it from customers? So I think they're still committed to it, but all those factors are at play. I mean, if EV adoption was running away at some unmitigated pace, it would spill over more into the semi and other form factor side, but it's not currently. So I think you have to take the high dollar capex and the low volume, high mix product lines. You need to put them on ice for a little bit.
So I looked at, I don't know, maybe 15 or 20 different reports from pundits and analysts and whatnot over the last 24 hours. Not, I'm going to say zero, either zero or one even mentioned Optimus. And yet, I'm sure you agree, it's going to dwarf everything else that's happening at Tesla. And Elon said it will be at work in the factory, currently working in the lab as if it were in the factory. They've got a factory setup doing the same job it will eventually do in the factory, and that it will be shipping to third parties next year. And yet it got no coverage.
Yeah. Um, yeah, I don't think the analyst community knows how to process it. I think they have a 6 month to 1 year kind of time horizon. And Tesla and Elon, when they do these audacious undertakings like the Cybertruck or like, you just insert it and fill in the blank. Sometimes these things take a little bit longer than if it's never been done before in the world, sometimes it takes longer. And I'm not a critic of that because I've done things that have never been done in the world, and it's really hard to put a timeline on things. So, um, so that's why I think they could be a little bit dismissive, and I just think they're kind of asleep at the wheel. Um, some of these, well, a lot of these companies don't understand the way that you or I would break down, labor efficiency in a factory and what it means, or the way Cern does it in his models. Like, if you don't have this kind of deep level understanding of well, how transformative this is, you're not going to spend a lot of time on it, and you're not going to put a lot of value. So it'll be one of these things, just like with H100s and NVIDIA, where it pops. And while it's popping, and while people realize, wow, oh my God, they just doubled or tripled their sales quarter on quarter, then they're going to be racing to catch up.
And then there was not one mention, this I'm sure of, not a single mention of the fact that the Cybertruck hit 1,000 per week in unit production. And I think that's like, I mean, every Cybertruck that goes out the door is the equivalent of two Model 3 or whatever, Model 2, whatever it's going to be called.
Well, actually, almost three at this point.
Yeah,
Yeah,
right.
two or three. Yeah, and yeah, no mention. And and you could wrap a couple of interesting metrics around it. It looks like this quarter, Cybertruck will surpass the F-150 electric, and then or the R1T from Rivian in terms of quarterly unit volume, and probably by the end of the year, it will pass them all combined. And it just tells you that I think this product is transcending multiple categories. It's not just a traditional pickup category, and it's a hit.
Yeah.
It's
Yeah.
a hit that it's going to pass it in Q2 when consumers are being charged 20% more over MSRP than they would in steady state.
Yes. Yeah. Yeah. I thought it was just crazy that that got no mentions. Okay. The stock now is, it took its 18 points higher yesterday, and then it's kind of stuck. Is that it until there's more news? Or are we kind of in the beginning of a ramp? Have we established a new floor, and now we'll just wait for the next to start moving kind of slowly up?
We didn't talk about it, but a lot of the analysts came out. There was a major upgrade from Bank of America, and a significant raise on the price target. But at least the first swath of analysts that came out, they were actually lowering their price targets on the company.
Yeah, I saw that.
So when you have that happen, I was surprised to see the stock up as much as it was today. But I honestly believe that there's a lot of pent up energy there, and um, again, it was oversold. But where does it go from here? So technically, I got to pull up the recent technicals, but we were broken on the 200-day for sure, the 50-day for sure, and I even think on the 20-day, because we were just since the Reuters article, we went straight down from 175 to 180 down to 140 in a straight line.
Right.
So you're technically broken, probably below those levels. You got to get back to 180. You got to close above that. And then, probably 200 is a big psychological number. And then I believe to get back to the 50-day, you're probably around 210. I got to go look at the numbers. And then the 200-day is, closer to 220 probably, or 230. So
Mhm.
those are so from I call it astrology perspective, you're
Right.
technically broken, below those levels. And so there's some repair to do. So Tesla's got to come out with some continued news flow. Who knows? Like maybe there's an update on the partner announcement for FSD. I know that's not going to drive huge dollars up front,
Right.
but there should be some dollars up front because there's going to be engineering work involved to integrate it. So, and there should be some sort of agreement signed. Um, but any big announcement there where you can also start looking at Tesla in a more sum of the parts basis versus just, the full business itself. Um, or could the market, rally off of really good mega cap performance? I know we got an issue with Meta today. But that's the other thing.
Yeah.
Could the market re-rally, back up?
Yeah. That's
And that could help support it.
right. First partner on the BY. I mean, sorry, the FSD. I'm calling BYD. Who do you think it'll be?
Forward.
You think it'll be Ford? Okay.
Yeah.
I think BYD because they got a lot of cars. They don't seem to have any program at all.
Well, but Tesla's been running you could be right. Tesla's been running FSD in North America, so I would think it'd be a North America based manufacturer. They're not even qualified to run in China yet. So, um, but they will be. I mean, over the integration timeline, they will be. So it could be a Chinese partner. So, we'll have to see. Um, and BYD and Tesla already have a procurement relationship together.
Right. Right. Today's durable good news was kind of dull. Cars and planes were up, but everything else was only up a little tiny bit. Markets seemed to move, didn't seem to move at all on that news. So that seemed to be kind of a nothing burger today. But then all of a sudden we had Nvidia continuing down big. Now it's down 20% from its all-time high. Meta getting crushed, as you just mentioned. Google and the rest of the Magnificent Seven. Well, Apple was fine. But anyway, what do you think's going on with them? I mean, are these just individual circumstances on each one, or are we looking at any kind of a group problem?
Well, I mean, as long as rates are moving towards 4.7, 4.75 and not towards 4.5, you're going to get pressure on tech. You're going to get pressure on interest rate sensitive names. Um, the Nvidia thing though has just been a mix of like weird pin action news. So I think last week people were expecting SMCI to pre-announce their earnings and they didn't do it. So like, oh, is there an Nvidia problem here? And then um, so everybody's kind of looking at these hyperscalers and saying, are they still buying Nvidia stuff or not? Everybody's kind of waiting for that shoe to drop of, you know, because they're just saying, look, semis are cyclical no matter what. Even if they're AI chips, they're cyclical. And some point you're in an excess of inventory. They're looking at the lead times. The lead times are coming down, but there's devils in the detail. Are the lead times coming down because they've doubled capacity at TSMC? We got to look at that kind of stuff. So I think there's been some pretty good read-throughs. And it looks like Meta said, like, one of the reasons Meta's down, they said, we're going to spend a whole hell of a lot more money
Bunch
on
of money.
CapEx this year and mainly on compute
Yeah.
than we originally planned. So if you're in NVIDIA, that would have perked my, like, okay, let's probably go into NVIDIA mostly.
Right.
So, and I know all these companies too are like, we're going to make our own chip. This takes a number of years to do.
Yep.
And there's the inference side and there's the training side. And, they may do the inference side. That's the smaller dollar piece of it. The data center training compute side is where NVIDIA, continues to dominate. So, So you have headline risk and issues out there, and again, it just ran up a lot. So maybe it's just it's taking a breather. It's got earnings, I think, on May 22nd. So we'll see what happens. Nvidia said Meta said they're gonna spend more, and they're going to be slightly under the revenue window guidance for Q2, and it sold off. So that one ran up a lot too.
Yeah.
So we have Google coming, we have Amazon, Apple, so they gotta deliver, or this market will be, because the Fed isn't in a rate cutting. They haven't announced that they're in a cut regime mode. They just announced that we're not hiking anymore. And I think there's even been some concern that
It could
they
hike.
could throw another hike in.
Yeah.
So you have all those things weighing. We have PCE Friday. So I think tech earnings and PCE, probably more tech earnings, will impact weigh on the markets the most.
And you got the GDP tomorrow too. So that's another
Yeah.
big one. And of course, two of the Magnificent Seven earnings tomorrow as well. All right. So you mentioned what's happening with the bonds, and of course they were up big today. So let's see what's going on in the. Oops, what happened here? We have got the 10-year down 1.2 basis points in the after hours, but it's up to 4.642 right now. So as you mentioned, getting close to that 4.7. Some people saying it could go back to 5 if the Fed doesn't move soon. You think it'll go back to 5?
If the Fed doesn't move soon.
Okay, there you go. All right. So the 2-year moved about the same in the pre-market, and the 2-month actually up 2.8 in the pre-market, which means that spread has opened up again. So it's almost back to 100 basis points again, and it was down to like 750 basis points. I am completely confused now in terms of the inversion problem. I don't know what to think anymore at all.
Yeah. Yeah, and that time window is so long too. It's a bit unpredictable.
But it's
But
got 20 months
the
now.
the last couple of bond auctions though have been stronger than the one that spooked the markets from last week, I think.
Right. I think today's bond market was unexpectedly okay. They were thinking it was gonna be hard to do. Oil even 82.80, so it's in great shape. I'm happy with oil right now. I don't see, I mean, it's going to probably take something international to move it, one way or the other at this point, some kind of a
Yeah.
problem internationally. Natural gas, again, same thing, kind of trading in a nice little range. I'm sure the oil producers in Texas would like it to bump up a lot more, but other than that, I think the consumer would be happy, and it should be good for inflation. Both of those should be good for the inflation problem. Gold has come down 100 points. Any thoughts on that one? Do you think it was just over its skis and needed
Yeah.
a? Okay.
Too much, kind of
Too
too
much.
much too soon for a metal like that.
Yep. Copper is still sitting at 445. I've tried to research this. I don't know if you've done any research on it, whether this is because of the demand coming in the next 2 or 3 years for all this electrical. But it's sitting almost at all-time highs at this point.
Yeah, I mean that, and then you have some geopolitical risks too. So you have all those factors weighing. But I've seen some of the production numbers come down, some of the industrial production numbers come down. So there's starting to be some signs that, you know, it's getting a little sketchy out there. So we need to see a couple more data points. Um, the JOLTS stuff hasn't been setting the world on fire. The jobless claims are pretty steady and they're pretty low.
Uh-huh.
So I don't know it's almost like I want this data audited. Like what's really happening? Because
Yeah, no,
I know of a lot of people that are getting laid off.
really.
And
In tech,
yeah, I mean
manufacturing, where?
tech and manufacturing, yeah,
Tech and
definitely
manufacturing.
both.
Okay. All right. Wow. Okay. That's interesting news. I mean,
But
I know it's
it's
just,
anecdotal. It's
I know it's,
anecdotal. It just
yeah.
yeah.
Bitcoin down 2,400 today at 64,000. Are we looking at the uh the ups and downs that we would expect after the halving?
Yeah. And I don't know how people I don't know how people can forecast Bitcoin. I have no idea.
I like that. So equities, Dow is down 76.20%. S&P down 30.59%, and the NASDAQ, of course, you're not going to be shocked by this one, down 188 or over 1% in the pre-market. So, of course, I'm sure that's a combination of NVIDIA and Meta.
Mostly Meta. Nvidia's only down maybe 1%, maybe 1.2%. It's Nvidia. I mean,
Right.
it's in sorry.
Meta, yeah,
Nvidia is only down 1.2%. It's Meta
right. But
down
yeah,
15%.
right. Yeah, so that'll be interesting to see how all that tomorrow should be the next 2 days should be pretty interesting for people that like to watch this stuff, which I assume is everybody that listens to it.
Yeah, I mean, if you don't blow the doors off of earnings and if you don't guide higher, your stock's going down.
Yeah, that's a real fact. Well, okay, Jeff, I think we've done everything oh, you know what we didn't look at? I'm so sorry. I would have been criticized broadly for this. The Tesla and the after hours down a $1.43. So a net today of 16 roughly up on the day.
Yeah, it's a
All
big
right.
day for Tesla.
Yeah, good day, very good day for Tesla. All right, Jeff, I'll cut you loose. I appreciate it as always. This is certainly a good news Tesla day, and the good news may be just getting better. Not maybe it, as they said in the call yesterday. No, we know it's going to get better and better and better. So thanks again for being on board, and to all of you out there, it's been great talking to you.
Thank you.